Can you hear me?
Hello,
How are you?
I'm good. How are you doing?
I'm well, thank you.
Yeah, happy Sunday.
How's your day going?
Kind of tiring.
It's normal. Hello, sorry, I started the
Yeah.
stream.
It's fine. It's fine.
Oh no, sorry, I was letting someone else that I started.
Oh, okay.
Okay, so I thought maybe we're going to discuss reversal patterns mostly, but we're also just going to look at our weekly signals.
Okay.
So if you have a pen and a paper, that would be great. So that when we highlight or when we point out the area that we want, you can set limits when markets open.
Okay.
Did you what I said?
Yeah. I heard you.
Yes. So if there's a, do you have a pen and a paper or your notebook or something?
Yeah, I have a pen and paper right here.
All right. So when we point out the areas or the limits or the limits that we want to enter for the swing trades, you write them down so that you can place them when markets open.
Okay.
Yes. And um are you good?
Yes. Good to go.
Which page would you like us to do?
Just a minute. Let me check mine.
Hmm?
Just a minute.
All right, can everyone hear me?
Yes.
Oh, well, it depends on the peer you want to tweak, because I was thinking of going for like, cause it's minor PS.
Yeah, we would
But
do
I can,
gold. We would do gold and pound USD.
yeah, that would be better then,
All right, so
since everyone.
if you think of any other page, just let me know.
Okay.
All right, so let's start with gold. For those who just joined, we were going to look mostly at reversal patterns, but also we're going to highlight or we're going to find areas that we want for limits for swing trades. So if you have a pen and a paper, that would be great so that you can write the areas down or the price down and then place the orders when markets open. I hope you all heard me. All right, we're going to look at gold first. So gold made the breakout that we discussed last week. If everyone has watched our streams that we did last week or was on our streams last week, I'm pretty sure they must have caught this move. If you didn't, you should learn something. So gold made the breakout last week, right? So we're going to go on our weekly candle. This is our weekly candle. We have this big, strong bullish move, right? I'm going to remove all of the analysis that we did last week, and we're going to highlight the high that the weekly candle made, and then we're going to highlight the low that the weekly candle made. That's our range. That's our most important range. So if price is going to go higher, it has to break the high. Or if price has to, if it's going to go any lower, it has to break the low. So those are our most important zones ever. Maybe we can highlight them. Let's just do this. Let's say weekly high, and then we will say weekly low, right? We're also going to go on our daily. So right now we know that price made a breakout, right? So we're going to go on the daily chart to highlight our area where it made the daily breakout, and that should be around here. So we're going to say the daily breakout, right? So what we know is when price makes a breakout, it always retests. So even if it retested on the smaller time frames, it still has to retest on the higher time frame. So let's look at our next high, just in case if price doesn't retest immediately, what's the area that it should hit for it to retest. So this is the high that price should hit for it to retest. So we're going to say our next, let's say next weekly high, and it's also on the daily, so we're just going to say weekly high, right? That's the area that it has to hit next for price to drop, if it's going to drop. So we go on our 4 hour time frame. So on our 4 hour time frame, right, we have this area that's written our daily breakout. So this is our daily breakout. But what if price was to come back down and hit this area first? So we're going to okay, we'll put our daily breakout right here, because for price to break out, it had to break this area. Let's do it this way. I'll explain a little bit more on it. All right. Shit, sorry, I changed the tabs by mistake. Sorry about that. All right, so if price is going to retest, right, it will retest, it will come back all the way down here. It will first make this low, it will first make that low, right? And then it will hit this area before it reaches this area. So instead of having our daily breakout right here in the middle of clean traffic, we have to put our daily breakout right here, because for price to say it broke out properly, it broke out this area. Because once price made a low, it made a new high right here. So we're watching this area for it to break, and it did break out. This one was the next breakout, but then this one became a minor breakout, because the most important area that price made a new low was around here. And after it broke out here, it made a new low right here. So we have two new lows that price created. So for price to go any lower, it has to break this low. So if you want to write this down, for price to change the direction of the trend, it has to break two supports or two resistances. That's when the trend will change. If price does not break two supports or two resistance, the trend will most likely continue. So what I mean is, if this is going to go back to being a bearish trend, for this to stop pushing high, for this to stop pushing higher and to start making new lows and new highs, price has to break this support one, and then this, once it gets back into this range, it's most likely going to break this low, and that's our weekly low. That means price will have higher chances to reach this low. Does that make sense? Are you guys understanding?
I do not really get you. Can you
All right.
please try to explain again?
All right, let me explain. You know how you use trend lines, right? If you use trend lines, you would put this trend line, right?
Yes,
And then for you to start thinking that price is going to start dropping, or it's going to turn back into a bearish trend, right? You expect price to break this trend line, right? So you'd want price maybe to come
yeah,
back here and break this trend line, right? Consolidate and
yes,
then price fall.
yes,
Yes. All right. However, remember when I said trend lines are okay to use, they are fine to use, but they are not really the best way to look out for a breakout, or to catch the early entries and the good trades. Because By the time price comes here, you don't really know where the support and the resistance is. So you most likely your trade will get, your stop losses will get hit a lot before it gives you the initial move that you wanted. And by the time price gives you the move that you wanted, you have already given up. So to get rid of that, we remove all the trend lines and we use market structure. So price has created a high right here, right? It has been going up and it created a new high right here. Let's say this is the strong resistance that it needed for it to reject going up and to push lower right here. And before it reached here, it created two supports, this support and this support, right? Whenever price is going higher and it creates a bearish candle, that's support or resistance being created. So for price to change direction and start being a bearish trend, it has to break two supports and two resistances, or two resistances. If price was going to go higher, if it needed to change a bearish trend into a bullish trend, it will have to break two resistance. For it to change a bullish trend into a bearish trend, it has to break two supports. So if price has reached our final resistance right here, right, and then it comes down, it hits this support, let's say retests a little bit, then breaks this support, right? That means price has higher chances of reaching this support, especially with the clean traffic that we have here. So let's say price pushes lower and it breaks the next support, right? That means price is no longer in a bullish trend, it's now starting a bearish trend. So for it to continue in a bearish trend, it has to stay below this support. But if price comes back and starts ranging above this support, then price is still in a bullish trend. Then now we're just calculating our Elliott waves, and let's say probably this is 1, this is 2, this is 3, we're expecting 4 to give us 5, right?
Yeah.
So for us to say, okay, now since we missed this bullish trend, right, but we also want to enter the bullish trend, right? Let's say price is
Mm-hmm.
going to continue in a bullish way and we want to enter also. Then now, if we are to highlight this area, let's highlight let's highlight okay, we already highlighted this area, but remember our daily breakout was around this area, right? So for someone who wants to get into this trade, they would enter right here. However, for us, let's look where that point is on our weekly candle. The daily breakout is this candle, is this line that I just put right here. Sorry about the mess, but this is the daily candle. But I'm saying, since everyone is going to be expecting price to hit this daily breakout line, right? Price will most likely drop to around this area, take everyone out, hit their stop losses, and then push higher. This is where our this is where 61.8 or around 50% retracement is. If you want to check that later out on your own chart, you can, but this is where it is. This is somewhere around the area that it is. So if we go on our 4-hour time frame, right, we're now checking where is our second support, where is our first support, and we've already highlighted as this is our first support and our second support, right? So this is the last support we are looking at for price not to break if it's going to stay in a bullish trend. So what we want to do is we set our limits around this support. So instead of setting them right at support, right, we will set them maybe a few pips below so that price can wick our limit and then pull back above support and then continue going higher, because price is most likely going to break support to fool people into selling before it pushes back and actually goes higher the way it wants to. So instead of us putting our limit right there, right, we are going to go on our 1-hour time frame and say, since price made a new support right here, right, I'm just going to adjust it just a little bit so that it's not cutting through candles. So we're saying, since this is our last support we're expecting, right, we can put our limit right here, right at 1747,178. Write that down. Buy limits at 1747. Yeah, that's good. Buy limits at 1747. If you don't put it, that's your fault. If you put it, you win. So we're going to say that's where our limits will be. So these limits, right, also respects our order blocks theory. So we are saying when price drops, it's going to hit last bearish candle before price gave us the big bullish move. And this is our last order block. When price gave us this huge traffic, this was the last bearish candle price printed. So we highlight that candle because price is most likely going to follow this traffic. This is an easy support to break. Follow this traffic, and then it hits our order block around here before it pushes higher. So that's also another reason why we are putting our buy limit around this area. So that's two confirmations, or let's say two signals that's telling us that we should put our buy limits there. So now let's count our Elliott wave. We have a low created, wave 1. We're assuming this is 2. We're assuming this is 3. We're assuming this is 4. This will be 5. A, B, and C. Something like this. So I would also set my sell limits right here because price could open on Monday, right? And then 4 straight up. However, high chances price will open on Monday, go up to resistance before it pushes any lower, because if price wanted to drop here, it would have dropped after this, if this very strong bearish candle, but price did not. If you want to catch a very nice entry, I would place my sell limits at, I'm going to place them at 1786.510. This will actually be a very nice trade as markets open. If you believe me, you will see. So I'm going to go on the daily time frame. We want to talk about this limit that we've said price will make. So if we look at the area that we're saying, oh, it's this one actually. This is the high that actually price made. Oh, that's a nice one. Okay, you place your sell limits there, and then you expect price to go down. But if price does not hit this one and start showing you strong bearish pressure, assume price is going to hit the next high before it starts going down. So if you find price hitting this area, 176.510, and it does not give you any bearish pressure, assume that it's going to start dropping or it's going to push higher before it goes any further low, because price gave us a new high right here. So high chances price will push higher before it comes down. If it doesn't do that, then you watch price or you look for an entry to push price to our next high before it gives us a new low. If you miss the sell limit, you can always catch price when it starts giving us a reversal pattern or a range to push price lower. If you see price giving you a big range, price is most likely going to push lower. If you don't see price giving you a big range, then price should push higher. So if market opens and you see price coming to this low and then it doesn't break this low and it pushes higher, price will most likely give you push a little bit higher, a little bit further high before it pushes down. Is it making sense?
Yes, yes, yes. But I have a question.
Yes, what's your question?
You were saying something about using reversal patterns for entries. Is it really possible?
Something about what?
Like making use of reversal patterns?
Yes, reversal patterns, right? You see, when market starts consolidating, let's let's give
Because I've been having this. I mean, people have actually been discussing saying that you have to look for reversal patterns for entries, and it kept on confusing me. Like I don't really understand. So Is it possible to make use of reversal patterns for entries?
All right. So reversal patterns, initially they actually a range. So when you see market consolidating or ranging or candles next to each other, right? You should automatically think there is a reversal pattern there. Sometimes there isn't a reversal pattern, but most of the time there is. So you use that reversal pattern to find entries. So let's say, for example, New Zealand dollar, right? nzdusd. So let's look at the daily or 4 hour. Okay, let's look at the 4 hour time frame. So this is the 4 hour time frame, right? And you wanted to see a reversal pattern for you to catch this trade. So there's always two patterns, well, it's two pattern, but one pattern that works on New Zealand dollar. Price will go up, create a high, come back, and then this pattern, it works on New Zealand dollar 90% of the time. It's either it will do that or it will do this, and then it gives you the big drop. The same thing going up, and then it gives you the big move. And if you are going to trade New Zealand dollar, right, this is the one pattern that works 90% of the time. I will show you how. So let's say we're looking at New Zealand dollar right here. Price dropped, right? Price dropped, created a low, came back up, created a high. So if all you wanted to do was for price to break this high, for you to catch the retracement to retest this, area. Because remember, when price when price was ranging around this area, price was ranging around this area, right? Before we got all of this action, price was ranging around this area, right? It created the M formation and it made the drop. So this is the first time you're seeing the M formation, right? It made the drop, but price did not retest around here. Even if it retested on the 1 hour time frame, 30-minute time frame, 15-minute time frame, that does not matter if price is not retested here on the 4 hour time frame going up. So we needed to see a retest before we can see price breaking the low that it made, because this low stuck. It created a low right here. It never went below that low. So we wanted price to retest this area if price is going to break this low, right? So when it created our first leg, and then it created a new high, all we're waiting is for price to break this area for it to go higher to this area. So that's how we would catch this trade, right? So price made the first low, it came up, then it came back down, it made the second low. So this is like a double bottom kind of thing that's happening right now. Retail traders will call it a double bottom. Other traders will call it an a W formation. Others will call it a WMI, whatever you wanna call it. Market was ranging. It broke the range. It created a smaller range and it pushed higher. So reversal patterns, it's a way of you understanding the range, or to look forward to what to see in that range, or what to expect from that range, or where you can get the breakout from that range. So we had a new low right here, right? So the moment price rejects this low, right, we are saying price has created a double bottom for it to go higher. So remember I said it's either it will do this, create another one right here before it goes higher. So when price creates a new low right here, right, and a new high right here, a new range around this area, right, all price is doing is accumulating more sellers, or grabbing liquidity for price to push higher, or they're just waiting for news that they priced in, but they need more people to sell. So they are fooling people into selling around here, because someone is going to put their trend line, something like this, right? And when price starts rejecting with a strong rejection like this and like this, they're going to say, oh, look, we have a W formation around here for price to push low to the next low and for it to drop. But they are forgetting that when price broke out from this high, it didn't exactly retest. That's why we're having price, it came all the way up here and it did not go anywhere yesterday or on Friday. It didn't move, it didn't go anywhere. Other pairs went higher. This one stayed around here because it hit the resistance that it had to retest before it pushes anywhere, or before it goes anywhere. So these people are forgetting this, right? Once they have enough people selling, that's when they push price higher. So that's why we always say, if you see a range, right, and then price breaks out of that range, it created a new high right here, right, and then it starts ranging above, even if it's just a little bit back into our previous range, but it's ranging above, that's only pushing price higher. So every time price hits your low, it's better to stay to keep setting your buy limits around this area, because price will hit that area, rejects it, hit that area, rejects it. So you can even collect a lot of money before price even breaks out for your range, from your range. All you have to understand is your first range, where we have our first initial reversal pattern, which is this one, right, the W formation. And in our range, we had the W formation again for price to push higher. So this could be a triple bottom actually. See, price came down, went up, came down, went up. A triple bottom before price even went higher. So it's the same thing that we always say, even in our range. If we have a range right here, right, and price has been coming to the low, to the high, to the low, to the high, right, and you start seeing price ranging at the bottom, that means price has created a new low for price to push lower. The same thing, if price was trying to go higher, and then it starts creating a range at the top of your initial range, that means price is going to push higher, because it has created a new low. They are starting to get enough people selling or buying for them to push in the direction that they want. So as long as price um, respects your new high or your new low, price will continue in that certain direction. So instead of being that person who's trying to sell and buy in that area, just look for where it's showing you that it's going to do, then just follow that. There isn't anything complicated to it. Just follow it. Is it making sense?
Okay.
Is it making sense?
Yes.
All right. So we're going to look at this pair actually. So do you see how price
Ngasekhetini ngoba
was
mina
at,
ngisendlini nje. Kodwa ngizobafonela 4 ya ngisendlini.
all right.
No, it's
Do we see how price was at a low
9065. Okay.
and then it created a new low and a new range, but we didn't get a retest around here, and price continued to go higher. So if price wants to go any higher, it has to retest this area, and then it will push higher. So for us to get that retest, what we need to see price doing, we could see price ranging in this area and then just make the drop. However, what would be best for us is if we get a breakout from the resistance, right? And then price comes back to close back in the range. This will be our first sign that price is high chances of dropping. Was the reason why I'm saying that is they understand that there are people who have sell limits right here, and they are definitely going to get hit. Orders will be placed, but they need those sell limits to hit stop loss before it pushes any lower. So we need to see price break out a little bit, and then it will push lower. So let's say we want to try and catch that breakout for price to push lower. We just look at our, well, let's look at the past, or let's go on our 1 hour time frame. And we see, oh, that's a long way back. Okay, we'll just use the 4 hour time frame. And then we'll see which area it should hit next before it goes any lower. So let's say around this area. Why are we saying around that area? That's where our next order block is. The last bullish candle before price started dropping. That's the last bullish candle. We use that last bullish candle to highlight when price started dropping. So this is our second resistance price has to break if price wants to push any higher. So we can expect it to reach the range of our last bullish candle. before price pushes any lower. So this is what I'm saying. If you see price breaking out around here and dipping into this area, expect price to drop lower. So we can say we are expecting price to maybe give us this, a retest, push higher, right? And we can catch this move, but initially we can also catch our bonus from our swing trades from when price reaches this area to push back all the way to retest this area. Now remember, for price to come back all the way here, right? Remember, okay, remember, for price to come all the way down here, it has to break out from this range, right? Go higher and reach this area and then come back here. But if it doesn't break this high, right, and then it drops from here down to break this range, right, then we was just setting our buy limits around this area for price to go all the way to the next high. Because if price is already reacted to this high, right, this high becomes invalid. Only this new high that has been created will push price, or that's the high that price has to break. So when something has been reacted to, it becomes invalid for this case, because support and resistance is created as price moves. Don't expect for price to do much with a support or resistance that price didn't create recently. It can do that on the higher time frames, but the most important support and resistance are the ones that are created as price moves. So we have price coming back to this high, right, and then it created this high, right? So we're saying if price doesn't break this low, we want price to break out, retest, and then come back all the way up here. We can catch this move, but initially the bonus move that we want is from price rejecting this high, dropping back all the way to retest the breakout if it's going to go any higher. That's what we want. So we can set our sell limits here and our buy limits here. So we're going to set buy limits at I don't know if anyone is setting their buy limits, but okay, around those areas, right? From 0.72568 and buy limits at 0.7687. However, if price breaks out from here, if it doesn't break out here, right, or if it makes the dip that we talked about out and then comes back to close back in the range, right, but it fails to go back outside, then you know price has high chances of just coming back all the way down to our support and dropping all the way to the retest before it continues high. So that means your buy limits will be getting hit first with our targets around here before your sell limit gets hit with your targets back down here. So another tip would be, if your buy limit gets hit first, right, it's best to delete your sell limit, because when price breaks out of the support and hits our next support, that's our retest, it's invalidating the sells around here. So all you need to know is, if you're going to keep your sell limits around here, right, price will come back all the way down here, hit your buy limit, but when it hits this resistance, right, your take profit, right, and where your sell limits are, if you're going to keep them, right, take note that price will reach the previous support or the previous low that it has made for you. That's where your take profits has to be. You can't put your take profits down here again, because that setup is invalidated. That market structure is no longer valid to us. But we can still have sell limits here and reach and get our take profits maybe here if price does create the new low around here, or wherever it creates the new low. That's where your take profits will be, because like we said earlier, your most important support and resistance are the ones that price are creating as price moves on. This one will no longer be as okay. This one will no longer be as important if price comes all the way up here and then comes back down, creates a new low here, or even creates a new low here. This will become invalid to us, but these are the lows that we'll be looking at for us to know where our price is going next, not the ones that has been that were created well a long time ago. Any questions? I'm gonna guess no. Now we have very little time left, but we are going to look at pound USD. Oof, that is beautiful. Maybe pound yen. Let's look at pound yen. All right, we have pound yen. Let's look at our weekly candle. Let's look at our weekly candle. That's a very weak weekly candle. It's a rejection candle, but that's a very weak weekly candle. But however, we will set our low. We'll first set the low of the weekly candle and the high of the weekly candle. We're just going to highlight that. Let's say that's the high, weekly high. Then we're going to say weekly low. So that we know if price is going to go any higher next week, it has to break the weekly high. If price is going to go any lower next week, it has to break the weekly low. So if it breaks the weekly high, it's probably going to go around here. If it breaks the weekly low, price is not going to stop until it reaches this area, around this area. This is our last bearish candle before price started creating bullish candle. So around this area. So looking at this weekly candle, right, that rejected price and then it came up here, and then with price coming back again down, rejecting it, creating a new low. So that means price is ranging around these areas. But what's important for us at the moment is the weekly high and the weekly low. So let's go on our daily and see. On our daily, it created a range. So that means we have on the weekly time frame we have a bigger range, and on the daily time frame we have another range. So we know that if price breaks this low, probably it has to do a weak fill. Now you know this is the weak fill on the weekly time frame. So price will most likely hit the weak fill, right? Retrace back up to retest the low, the weekly low that it would have break, and then continue down. So since we have highlighted weak fill, weekly low right here, right? We're just going to say weekly weak fill. So in case if you catch that trade, understand that price will most likely do a weak fill. So you can take your profits there, and then you can watch price to retest before it pushes any lower. Just to keep that in mind. So let's go on our 4-hour time frame. There we go. On our 4-hour time frame, we have this weekly low. We're just going to highlight this range nicely, the weekly high, and we have our weekly weak fill. So on our 4-hour time frame, I don't think there's anything that needs to be highlighted, unless if we highlight the next high, the next weekly. This is actually the next weekly resistance, daily or weekly. Let's check our daily time frame. All right. So understand this. I hope everyone can see how we have clean traffic on the weekly time frame. We have this clean traffic on the weekly time frame, right? So if price breaks this weekly high, our previous weekly high, price is most likely going to reach the next weekly high, which is around, let me highlight it for you. Weekly high, that's this one. next weekly high. However, before it reaches that next weekly high, I don't expect price to move in one direction. It might, but before it reaches that next weekly high, there is a resistance on the 4-hour time frame. So we're going to say resistance, 84 resistance, right? So what we are trying to say is price could break this weekly high, right? Our last weekly high, right? We have clean traffic right here, so we can get clean traffic to all the way down here. Then from here, don't expect price to break immediately, right? Don't expect price to break immediately. Expect price to retest this high that it would have retested, because remember, this range has happened on a daily time frame, so expect it to retest before it goes any higher. So what makes us more confident about this analysis is, earlier on we talked about how when price is creating a range, we want it to dip out before it pushes anyway. So we had a range right here and we have price dipping out. This is our dip out. If you measure it, it might be 10 pips or more, and that's perfect because price came back to close in the range. So from here, we can expect price to come back for the retracement when market opens, and as the week goes on, it will go on to break this high and then go on to the next resistance, come back for the retest, and then go on to the next high. So I would not expect anyone to take sales in the range. If you don't see buys, it's better not to take a trade until you see a buy setup, because price right now is giving us more bullishness analysis. If you want to see price going down, only start taking sales when price breaks this low. When price is inside this range, that's when you can only